Hannah Oreskovich, and I am currently serving as the advising comm steward for ETHDenver. You might have seen during opening ceremonies, long and storied history with the event, have worked in many verticals in marketing and comms in the space. And today we're going to be getting real with RealFi. So I'm excited to bring you into the discussion. We're going to start off with some intros from our lovely panelists here. John, kick us off.
I'm not going to intro myself again. I'm John. I was at opening ceremonies. I'm the founder and chief executive steward of ETHDenver and also the founder of Opolis, here to talk about bringing healthcare insurance on chain.
I'm Lucas Kaczynski, founding contributor of Renzo. I've been building in the space since 2017. If you're not familiar with Renzo, one of the biggest integrations that we have that we'll be talking about today is EigenLayer. So we were one of the first projects in early 23 to start building significant infrastructure on EigenLayer to make restaking easy and accessible for users to be able to access yield on top of EigenLayer.
I'm Patrick Hudgins. I'm the CRO of Alpha Growth. Alpha Growth is a private equity firm that helps run the protocols. We currently are at the helm of Compound Finance. We also do business development and partnerships for a variety of protocols, mostly sort of later stage, more mature, but also younger labs projects that need to get started off on the right foot.
Great. So I think we're at a really interesting inflection point in Web3 right now. If you've been with us for a few years or more, I think you're probably likely to agree. And what I find so fascinating about RealFi is that it really bridges that gap between crypto and traditional financial systems. So we're bringing, ooh, hot mic, thanks. Diving in, I am curious to hear how you guys think about the transition from DeFi into RealFi. Who wants to kick us off?
Yeah, I could take that one. So when you think about EigenLayer, when EigenLayer came on the scene, especially last ETHDenver, it was very, it was the main kind of narrative in the Ethereum space. We first started building on top of EigenLayer to bring DeFi and liquidity into the ecosystem. But at Renzo, what we were trying to actually do is build the rails and prove product market fit to be able to bring different kind of liquidity into the ecosystem. And what we're starting to see with our conversations with Opolis and Alpha Growth is that now the ecosystem is becoming a little bit more mature. And we're starting to see real life applications that want, essentially, when you think about restaking, is access to capital for insurance-like purposes. So we've started to cook a little bit with the Opolis team and the Alpha Growth team to figure out what the demand is on the healthcare insurance space, what kind of problems they're trying to solve, and on the other side of the marketplace, Renzo has rails that we've built out and that could adapt to different use cases. So don't just think about liquid restaking as a token. I personally believe that it's actually not a very good fit for everything that restaking has to offer because some of the leverage that's built up with DeFi integrations and like lending protocols. But we could use those same rails to essentially create bond-like structured vehicles that could bring in capital that serve like an insurance pool for healthcare. So that's how we've been thinking about it and working with John and Pat's team.
Yeah, and I mean, it's obviously just a very cutting edge place to be working in right now. So I'm curious, maybe Patrick, this might be a good one for you on the risk management side. What are kind of the biggest hurdles that you're seeing with integrating these traditional financial systems into these decentralized protocols, and kind of, you know, how are you seeing some of the projects in the ecosystem overcome those challenges?
Yeah, good question. I mean,
Mic up higher.
oh, sorry.
There you go.
There you Practical application is I think what the industry is looking for, like throughout. There's practical application in DeFi for DeFi use cases, but bringing those to the real world requires a ton of regulatory understanding and but also understanding sort of the risk thresholds and being able to make practical application and lower costs for end users. So DeFi is great, but if it's not, boots on the ground, rubber meets the road, we're still pigeonholed in our own industry. So that's what I'm passionate about.
Great. So in terms of kind of, bridging that gap, what are you finding are the key regulatory hurdles currently? Yeah.
I mean, health insurance, for example, has some pretty big ones. We talk a lot about progressive decentralization over the past 5 seasons. We're going to have to do the same. I think in the end, what ends up happening is you'll have to just become the insurance company. So you'll have to play by whatever regulatory rules exist there. But there's ways that we can kind of lead up to that. Like we've been self-insured. One of the things that we learned about the existing regulatory framework is it's highly favorable to the capital providers and existing incumbents who provide things like stop-loss insurance and all the things that kind of exist under the hood. And it's designed to make those guys a lot of money. And it's, the players on the front end, both the providers and they're the ones who are getting, and the payers, right? The people, the actual consumers are the ones getting hosed. So it's a progressive approach. The regulatory challenges are not insurmountable, though. I mean, they've got the biggest thing is capital, because, to compete with the likes of Blue Cross and Cigna, they call these the BUCA companies. It's really size, and they throw their weight around a lot. So, and they use the regulatory stuff to their advantage. But there's actually a lot more players that exist behind that. But you've got one of the key strategies that we've got to make that work is not only presenting a regulatory compliant protocol, but also giving them the right incentives to come play.
In terms of bridging that gap with regulation and then kind of more on the solution innovation side, this is a question for you, Lucas. Renzo is building liquid restaking infrastructure, and so how is that helping increase some of the capital efficiency of staked Ethereum and providing liquidity for these dApps?
The best way to think about it is we've built out these rails that now we're able to customize and apply towards different use cases. And when you think about what John just said around the problem, one of the biggest problems they need to solve outside of regulatory is liquidity. Well, that's what we do. We source liquidity. We work with partners like Alpha Growth. We also work with Chaos Labs to assess the risk and provide information to people that are willing to put up their capital in order to get some kind of yield. But what we're essentially doing is we're streamlining the process and we're bringing the players that are needed together, eliminating all the middleman. And what happens is the capital becomes a lot more efficient. And not only is the capital more efficient, but anybody could participate. So if you're a user of Opolis at a health plan and you want to be able to contribute to the insurance pool, it's very easy to do that now. So you could benefit from that as well, where the premiums that are essentially the yield for people that deposit, you could be on both sides of the marketplace as individuals. So I think the tech is efficient and mature enough now where we could actually go through these use cases, do a proof of concept very easily. I think the challenge is going to be really understanding data from a risk perspective and being able to inform users who are willing to put up capital to understand what the risks are and potentially what kind of returns they might get for allocating capital into an insurance pool.
Sure. And beyond insurance pools, and Patrick, maybe this is one for you, kind of overseeing so much of the ecosystem, like what other RealFi use cases are you seeing drive real economic impact right now?
Well, there's an opportunity for insurance, not just health insurance, but insurance throughout the industry that I think is available now that wasn't, and that's a testament to the technology and like all of the trials and tribulations that the technology has gone through for restaking, and like that industry has developed to a point now where you can now offer different products in a unique way that we're excited about. Insurance, health insurance. Yeah.
Yeah, go ahead.
Yeah, I could add there. We're saying insurance, but it's just underwriting risk. So when you think about what kind of risk out there to underwrite, you could have different TradFi strategies that are on chain that might need underwriting. We're also talking about monitoring on chain of like smart contracts. That's underwriting risk, right? So when you think of it that way, insurance is a much broader term. We're just simply trying to underwrite different kind of risk. So protocols have things that they operate outside of Web3 to make a company run. And now there's this pool of capital that is looking for different kind of yields, and they could underwrite that risk in different ways.
Mm-hmm. Yeah, I'm also thinking about like, loans, credit applications, like anything there that you've seen that you want to mention?
Yeah, there's definitely a few credit cards coming on board. The insurance stuff is the piece that I'm like most interested in because it's such a strong corollary to the financial industry. I mean, like it's essentially what he said, which is underwriting risk at the end of the day. And if you can do so in a way that provides real economic value to everyday people, then you strengthen the industry overall because you're growing the pie, you're growing the end base and user base.
I mean, I'll just add that from my point of view on the user front end side is dealing with the actual consumers. We learned this pretty quickly. We've been live for 4 years and, with over 1,000 members to date, $60 million in payroll. The business works. I said in my keynote earlier, it works, but the problem is the existing financial architecture is designed against you. And if we were to actually scale it to, let's say, 10x that, they could just flip off the lights because there's no incentive to actually make the capital more efficient. The way they underwrite risk and the way they manage the entire financial flow is just corrupt. And so having transparency, I think transparency in financial markets is probably the biggest benefit because now, you can really streamline incentives, you can make capital more efficient, you can make capital more high frequency, and in the end, that just translates to cost savings. And right now, there's no incentive for cost savings in the entire health insurance industry. I don't know if anybody's noticed that, but health insurance premiums went up for Opolis on the base plans 40%. We had to hip and shake and negotiate everywhere just to try to survive. So having it on chain, I think, the transparency in the markets, these risk pools, insurance is an obvious use case for restaking. And RealFi coming to fruition where we really bridge those worlds, I think is going to be one of the most exciting chapters that we see.
The way that you guys are talking about collaborating together definitely reminds me of the regenerative spirit here this year at ETHDenver. So I'm curious, how can the ETHDenver community contribute to scalable RealFi solutions? Are there roles that builders could play right now in accelerating this transformation? What kind of products, would you want to see builders working on this week?
On the Renzo side, we've built these open source solutions, and it's the infrastructure that's very heavy and very difficult to maintain from a security standpoint to get in and out of EigenLayer. We've created SDKs and essentially these vaults that make it very easy for anybody to be able to deploy. So we always take the lead and try to build and innovate in the space first to show that things could be done. But we shouldn't be the bottleneck. Others, if they have different kind of ideas and are looking for underwriting risk, can come to Renzo, and we could help you use the Renzo tech stack to deploy some of these things in a safe and secure manner.
Did you want to speak? Yeah.
I'm just making sure we
I
don't
got
go
you.
over.
I got you.
Because she'll get mad at me if we do.
Fair enough.
For us, I think come engage with the Opolis team. I've got my 2 co-founders down here. We're at the Sporkwell Lounge in and around there. If you're in the front, where the kind of main entrance is, become a member. That's actually how you can contribute. Be a consumer of the product. We're going to be accelerating our team in spring into the summer, so there's going to be a lot of opportunities to contribute to bringing healthcare, humane and on-chain, to reality. So just come talk to us. I mean, I'm around. You can't miss me wearing all this bright stuff. So that's how we can benefit from that.
Great. Any final thoughts that any of you want to share on what you're most excited about for the potential of RealFi?
I mean, I think John said it earlier, but the bloat in the insurance business is massive, and it's a moral hazard at this point with regards to pricing, and it hurts everybody. It affects everybody. The same thing that DeFi is doing for the finance industry, which the incumbents aren't appreciative of. We're hoping to do the same for health insurance, and now the regulatory climate is more preferable or more favorable for that, and we've got a real opportunity. So. Please engage with the Opolis team. We'll be around. If you see me around, please tap me on the shoulder. Lots of ways to get involved.
Great. Thank you.
Thank you, guys.
Thank you.
Thanks, everyone.